Iran's oil is almost entirely going, well, a lot of it is going to China. And I don't think China are going to want, nor is Iran going to want to cut that oil off, which was perceived to be the big risk of the Israel situation. On the oil price and what we see here, basically this is a seasonally weak time of year. You've just come out of what is actually going to be a record U.S. harvest, and harvest season is big for diesel demand. But right here we have something of a lull. It's before winter, after harvest season, and it's seasonally a weak time. In fact, refining margins are pretty much high for this time of year. They've come off a lot, and of course refining margins are one of the best indicators of demand. So I think, the sheer scale of demand here is so important. Over 100 million barrels a day is so much oil. And then on top of that, of course, we start flipping the coin on winter. And I always said New York winter starts around December the 5th when it should snow. Winter did not show up last year. It was the second warmest on record. The swing there can be, hundreds of thousands of barrels a day globally, obviously. And, we'll see what happens with that. But our call has been that we bounce here in oil if we hold 80. There's a very important set of data coming up from the U.S. government, DOE, weekly data, because they didn't publish last week. So this week we have a double set of data coming out on Wednesday, and that could show very big inventory builds in crude. If the market doesn't panic on that number, I think it's bullish for oil as we head into winter.
Can I ask you, and I do want to broaden out the scope a little bit in a few seconds, but just in terms of what the US government, I suppose, is doing right now, and I suppose what Treasury is doing right now, because this morning I see flashing on the wires they've bought 1.2 million barrels for the SPR. I'm not necessarily certain as to the price of the barrels that they're buying, but it can't necessarily be cheap. And you've got the Treasury Department going after, shipping companies that are perhaps facilitating, Russian oil at above, the price cap prices. But all of these activities wouldn't necessarily be something that would drive down the prices. And I suppose that the administration has been long a stalwart for trying to drive down the prices, considering the inflation implications.
I think it's a very astute question, and I'll tell you a conspiracy theory in a second. But just to be precise, the U.S. Department of Energy had stated that they would buy WTI. They would bid for oil for the SPR, I should say, at below $79 a barrel TI, and you've gone below that, and so they are buying. It's not a huge amount, but it's definitely significant at the very margin. The conspiracy theory would be that the U.S. may be cracking down on Russia and not, as you say, trying to drive the price down a whole lot more because of interactions with Saudi. And it may be that Saudi is saying to them, listen, we're having our lunch eaten by the Russians here. You do us a favor in terms of cutting down on Russian smuggling, ostensibly,